Time to see what's on the radar for John O'Connell, Chairman and CEO at Davis Rea. And tech companies is what's catching your eye right now, including Microsoft. John.
Yeah, I mean, you got to look where the panic is, right? That's where you find value. And recently, everybody's come to the conclusion that AI is going to destroy everything, and Microsoft's in the crosshairs of this, which I find amusing. You know, people are worried about people aren't going to be using Outlook and Word and Excel and all that kind of stuff. And you know, we talked about a little bit earlier on about Canadian Tire. You know, people have to realize that yes, AI is an incredibly powerful thing, and Microsoft, Amazon, and Google are the major enablers of all that AI to actually come to fruition. So that's the first major strength of Microsoft. The second one is, like Canadian Tire, they're investing tens of billions of dollars into infrastructure to make sure that their business stays competitive and they continue to build a massive moat around their business. You know, in the most recent quarter, analysts, just like with Walmart, were overly optimistic. They wanted their Azure cloud business to grow at 38 to 40%. They grew at 38%, which was spot on what the analysts had estimated, but they wanted 40%. And the company said, look, we could have grown at 40% if we rented out all of our server equipment to OpenAI and people that want to rent our servers, but we need them for our own practical purposes and for our own development purposes as well. And that's kind of what you want to hear from companies, that they're making the investments to make sure that they're staying relevant and competitive in their business. It's very difficult for a large bank or BNN for that matter to just switch all of their legacy providers with all that legacy information and connectivity of all the applications within Microsoft to some program inside your company that's going to, you know, create some CRM system or something, or some new Teams or some new Zooms application. So I think it's very difficult. And for a company that's down, you know, 40% from its size, almost trading at 22 times earnings, kind of close to what the market multiple is, in spite of investing all that money into their infrastructure, remain competitive, I think augurs very well for people that have more than a 30-second view. You know, a year ago, people were worried about Google, and today Google's the star and Microsoft's the pig. So I think, you know, when analysts become overly confident in their opinions or overly bearish, that's where you should be looking for value.
All right, next up, we've got Meta. And just looking, they're going to spend $65 million in an election push to advance AI. They're in it to win it, aren't they?
Well, I think, you know, you better hope they are. I mean, if everyone's worried about AI when the sky is falling, here's a company that's been fearless always in terms of investing money to stay relevant, to stay one of the most advanced data science companies in the world. You know, their revenues are growing 30% off a large number. They're demonstrating how AI is actually driving increased engagement into their business. People are worried about lawsuits and stuff. Yes, that is a concern, and there's some very unfortunate things happen on on Meta properties. This company's trading at 20 times earnings, growing at 30%. The market's trading at 22 times earnings and growing at maybe 10%. You've got companies like Caterpillar, because of the commodity boom right now, trading at 30 times earnings, growing at 4%. So you look at these companies that are, you know, quite capable of spending all this money, investing in their infrastructure, making sure they have durable long-term franchises, making those investments, growing their revenues, growing their profits, plowing it back into the business to make sure they stay competitive, and people are negative. I just think that, you know, investors, you know, they rotate and all that kind of stuff. But if you play that game, that's not the game that Davis Rea plays for our clients. But if you play that game, you're playing with fire. I've done this for 40 years, and it's, if you can find companies that are growing at 20 or 30%, trading at market multiples, when the market's growing at maybe 6 or 7% on a longer term basis, I think you're playing with fire if you don't own companies like this, these kind of levels.